All right, everybody, ladies and gentlemen, hello and welcome here to our webinar at Nadex. My name is Philip and I will be once again your presenter for today's webinar, The Market Movers for today, the 23rd of May, 2017. Time flies for sure. If you have a look at your webinar interface, you can see that small questions box, and please make heavy use of that box. Let me know what's in your mind, and if there are any questions, if I should explain things a little bit differently than I do, just let me know. My idea for this webinar is I want you guys to learn something. And I think asking questions is a vital part of that experience. And right now, just to get you guys acquainted to that questions box, I would appreciate a very short yes or why in that set box to just let me know that both the audio and the screencast are working properly. As usual, this webinar is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you're comfortable with them. Thank you very much, everybody, for the feedback. Seems that both audio and video are really nice and sounding strong. So let's make best use of that. All right, so what is in this said risk warning? Essentially, this says that trading involves risk and that you should, of course, understand those risks and the instruments you're using before you are getting active in the market. As neither Traders Position nor myself are investment advisors, nothing that we say should be considered to be investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be looking at the big indices market, at the big index markets, let's put it that way, and at some of the precious metals. And yeah, I tell you what I see on those charts, and of course I do have an opinion, but that's just it. It's just my opinion, and I can be totally wrong. Nobody knows what the market will do, and you're looking inside my head, but at no point in time should you think that this is some kind of investment advice. And I have to disappoint you, I don't have that crystal ball and I don't know what's coming next. So I just can gather small advantages, stack the odds in my favor, and hope to win more often than I lose. And I have losing trades for sure. So just to get us all here on the same page, it's really just for educational purposes. All right. And of course, we do have a further risk warning, this time directly coming from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's have a look at today's agenda. We will be analyzing the markets together. And the idea here is, of course, here at Traders Position, we do have trading strategies. And personally, I'm always waiting for the most perfect setup to occur. And if that's not the case during our time here on the webinar, I will be placing different trades. But please understand, those are not the trades I would be placing in my own account. It's really just for demonstrational purposes. I want you to see A, how I read the charts and what I can see on those charts, and B, how easy it is to trade an opinion that you might have in the markets using Nadex contracts. However, those trades are definitely not template trades for you to blindly follow. It's just for educational purpose, and for that reason, usually I try to place both a long and a short trade to really balance any opinions that you might read into that. So yeah, that's pretty much the main and core part of today's webinar. Yeah, that being said, I would suggest that we just directly jump over to the live markets, to the charts, and here they are. I don't know if you have read or watched the news. This week's news, very big opener headliner, was that George Soros, Hungarian billionaire, is again at large and is actively investing in the markets once again. And this time he has decided that he is probably taking a very large short position, betting against two of the big US index markets that we see. His major short position is in the Russell 2000. He's betting on falling prices there with a three-digit million position size or money at risk going against the Russell. And his second largest short position is in the S&P 500. However, he has also taken some long positions, and those have been components of Nasdaq. And so I think it might make sense to have a look at those markets and understand what's going on there. And keep in mind, George Soros is very successful. He has currently a net worth of around about 25.2 billion US dollars. Obviously, this guy is doing something right. I think that his approach to trading is coming very much from a fundamental perspective. This is not what I'm doing here. I'm looking at charts. I want to understand what those charts are telling me, because I think in those charts we can see quite a lot. We can see how people have reacted, how market participants have reacted to certain levels in price. And that's the main idea here, looking at those charts. I don't have access to all those numbers and figures and fundamental KPIs that Mr. Soros probably will be looking at. I don't have his large-scale analyst team to support his fundamental picture, but I don't have to. It's really, you have to pick your game. If you want to be a fundamental trader like him, that's perfectly fine. I like to look at charts, read what I can see on those charts, and let's have a look what I see on those charts, and maybe I arrive at the same conclusions as him. Should be a fun exercise. So let's get started here. I would like to kick it off with the S&P 500. And just looking at the S&P 500 here, let's get started on the monthly chart. And the monthly chart for sure looks like a nice uptrend here. Remember, the first thing for our trading strategies here at Trade with Position are they are trend following strategies, which means we want to see good strong trends. If the market is range bound, something that we saw here, it's not really that our strategies are applicable, and the market just isn't giving us the context that we're looking for placing new positions or opening new trades. Now, however, we saw this line in the market here, this flat horizontal level. We saw the beginning of new lower lows. However, price really pushed higher, and we started to see higher highs and higher lows again. And we see the fanning pattern in our moving averages, 10 clearly above the 20, above the 50, above the 200. So all this is showing good, strong strength and the long-term picture here on the monthly chart. However, if we have a look at what's been going on here, just compare the length of this ascension here compared to the sideways length of the sideways phase, and then the next run up. And we can see that this run up here was definitely stronger if we compare what our indicators, MACD and RSI, at what levels those had been trading or had been listed here, and now we compare them where they are right now. Price clearly made new higher highs here. However, if we look at MACD, we can see that MACD currently still is well below the levels of its readings when we saw this extended move up here starting 2012 until 2015. So what we're seeing here is indicator divergence. Price is making new higher highs. However, our indicators are not yet following suit. Doesn't have to mean a thing, but it's an early warning sign that this move up, those new highs might not be those as strong as you think they could be. It's just one indication. And trading, at least for us here at Trade with Position, is always about stacking the odds in our favor, which means we're looking for a lot of different pictures here and different factors that we want to identify in order to gather those small advantages. And in the end, it should be like stacking those odds in our favor should give us a winning rate on our trades of maybe 55 to 45% or 60 to 40%. Winning more often and trying to manage that those winners are bigger than the losers. This is what makes trading work for us. It's never about one single trade. We will never know if it's really, if that next trade that we put on will be a winning or a losing trade. It's completely random. But we know that over a large sample set of trades, we should have an edge. We should be able to move forward. just reading a question here. How would it be the easy way to read the MACD indicator? Okay, just keep in mind, guys, and I'm enlarging here the indicator pane. We are not using MACD and RSI in the conventional way. The conventional way would tell you that MACD has crossed down here across its signal line, and therefore this should be a long position, and the long position should be terminated here as we are falling back below this. In the end, this is nothing but a simple moving average crossover system, and this is a lagging indicator. This means you are late to the party. If you have a look at it, you can see that this signal would have occurred round about here. Guess what? If you look at the chart, this would have been a nice place to buy the market, but you're getting the signal only, sorry, I'm talking nonsense here. You would have gotten the signal round about here, and just compare it. You got the signal here on, that's the first bar where it's trading above. So you would have entered the market here, while the market low for that move would have been there. Lagging indicators, you're usually late to the party. However, if I'm comparing now what the absolute level, and let me draw in a line here to make it sure, to make it obvious what I'm looking at here. I'm comparing the high in MACD that we saw here when the price made new higher highs. And I'm comparing that strength of that move with where MACD is trading now. And you can see that although price made new higher highs, MACD hasn't done higher highs yet. We still see lower highs here, and this is the only way we are using MACD. I don't care about the histogram. I don't care about the signal line here. I'm just looking at the absolute levels, and when price made a new higher high, is MACD also making new higher highs? That's indicator convergence. That's usually a sign for a strong and healthy trend. If you're starting to see divergence, lower highs in indicators while higher highs in price, that's an early warning sign. And that's the same, exactly the same way we use RSI. You can see that RSI made those new highs here at this area, and right now we're trading well below those highs, those levels there. That's the only way. I don't care that RSI is trading above 70 or 75 or below 30. I don't care about if it's overbought or oversold. Again, those are then lagging indicators. I want to see leading indicators, and using those indicators, those conventional indicators in this rather modern way is what gives us, again, an idea about what the future might bring. All right, so monthly chart is looking strong. However, we see early warning signs here in our indicators. Let's drop down with our time frames and see what's going on there. Here, pretty much the same picture. Let's have a look. Price made a new high here. We pulled back, and now price pushed higher, and you can see it merely made a new higher high there. This was a strong, healthy run upwards. Pullback, all nice and dandy. However, the pullback took a little bit longer than you would like to see it. Usually you want to see run up, pullback, run up, pullback. But this was a rather extended pullback. You can see this pullback lasted for about 8 weeks or so, way too long. And you can see that a lot of momentum got lost here. Our MACD has started to pull back. RSI has started to pull back. And now price made a new higher high. And you can see, yes, price made a new higher high, however, ever so slightly. But at the same point in time, this new higher high was not confirmed in our indices, in our indicators. MACD clearly made a new lower high, and RSI also made a new lower high. Extended pullback resulting in indicator divergence once again here on the weekly chart. So we have a second level of dark clouds on the sky, on the horizon, that something might not be quite right. Next thing, let's have a look here at the daily chart. Some more levels here on that chart, and you can see that it was really an endeavor to try to make new higher highs here. And when the recent high had been taken out here, it was not that there was a strong follow-through day and prices shot up and everybody said, okay, sky's the limit, let's just shoot for the stars. Obviously, and another test of this level and a pullback, and it failed. And now we're testing this level here once again. And just compare what we're seeing here. Now we see a retest of this recent high. However, price here, or MACD, clearly here is again making lower highs compared to this test here. And also this test just a few days before, on a micro scale, this also had higher highs in MACD. So again, here a double-legged or three-legged divergence setting up in MACD once again. You can also see that we have here good strong width in our indicators, or width of those moving averages. We see that fanning pattern here, pulling back and fanning again. And here, not only did those moving averages close back, the 10 period crossed below the 20. This doesn't generate a signal. Well, remember, trading of crossing moving averages, usually trading in hindsight, or trading lagging indicators. You are late to the party. What I want to see is, when I'm looking at those moving averages, I want to see a good, strong trend. I want to see something like that. Price is shooting higher, pulling back, structure supports a bullish setup here. We get a bullish candle setting up here in the buy zone, and price shoots up higher again. This is what a good, strong trend move higher looks like. Does this here look anything like that? No, absolutely it doesn't. We're seeing here another test of this level, and what I'm seeing here on those charts, this is not a setup I could be trading following our strategies, because we want to be trend following strategies. The trend so far here has been, at least on the weekly chart, has been an uptrend. The daily chart pretty much is unclear here for me. We could be calling this the lows here. Then we would see here a lower low. We're pulling back now to see maybe a lower high. The moving averages haven't yet fallen into line in order to support a short trade. So here on the daily chart, for me, this wouldn't be something I would consider to trade. The big picture that I want to get, and I don't think that Mr. Soros had taken a position in very short-term contracts. I think he's in that game for a rather longer period of time. And for that longer period of time, I get definitely a very bearish vibe from this, from those charts, and this is why I can relate to his idea that this market might be poised for a downturn and going lower. However, if I think that this push higher here on the daily chart, being supported from the weekly and monthly, could be a potential short trade or is more bearish than bullish, why not look at the lower time frames and decide if we want to see, or if we see something there and think that this might be present us with a tradable opportunity there. And here on those 15 minutes and 60 minutes and 2 hour and 4 hour and 8 hour charts, I don't see a setup that I want to trade. They are all pointing more towards the long side here right now. But the big picture that I got is bearish. You always want to align your trades across your different time frames. It doesn't make sense for me to trade a 15-minute chart here, potentially to the upside. Let's focus on this 15-minute chart here. Those familiar with our strategies, and by the way, you can learn more about those strategies if you search here the webinar archives. There are recording of the advanced course here available. The strategies are explained, the indicators are explained. All this is covered. If you have that knowledge, you could tell me, but wait, Philip, this looks like a potential momentum breakout strategy trade here. Let's have a look at it here. Now, first thing, I can only see one touch of this price level here, maybe a second touch here. I want to see at least 3 touches. Here, that's too far away. So the first thing, we're not really seeing that perfect price level that we're looking for. Number one, why I wouldn't consider this to be, why this couldn't have been a potential long trade here. Next thing, for this type of trade, what we want to see is a series of rising higher lows as price is compressing against this potentially flat level. What we're seeing here is a low, we're seeing a higher low, all very nice and good, but here definitely it's a lower low. So right here and now, you can argue that this trend already had changed at that point in time, and therefore a potential breakout here might not be that interesting. Can it work? Sure, it can work. Our backtests, however, our trading logs, our experience has told us that if we are not seeing that compression pattern, those setups will fail more often than they work. And we just want the opposite to happen. We want our setups to work more often than they fail. So lower low, second big no-no, I wouldn't have considered to take a position here after that. And now coming back to our leading indicators, looking at indicator convergence or divergence. We had the first test of this not so precise level round about here. We had a second test of this level round about here. And you can clearly see that once we tested this level here, MACD was trading at lower values than what we saw before for the first test. And when we were very close to test this level again, guess what? Lower values again. And as we are about to break out, lower values once again. So again, MACD shows me on multiple tests of this level, continuous divergence. It's not supporting the big picture that I'm seeing here. And for that reason, I would not have placed the trade that this could be a potentially successful breakout trade here to the upside. However, if you don't agree with what I'm saying and you just think, looks like the market is going higher, how could we be trading this now with Nadex contracts? Let's just bring in the platform here and have a look at where are my indices binaries perfectly. And we're looking here at the US 500. And you can see here we have multiple expiry cycles available for our trading. And if we just pick this one here, you can see this contract has about 1 hour and 38 minutes left until expiry. Now you could say, okay, this market is going higher. I want to speculate that the market keeps on going higher. We're trading now at 2,399.29. And so why not have a look at this contract here? Now, we're trading here the contract with a strike price of 2,401. You can currently buy this contract for 28.25. And if I think that I might be buying this contract 2 times, and let's just place that trade here. And you see the order has been filled. Now, what is my position here? It's a binary contract. And this means I'm trading this trade, I'm taking that position, and my bet is that at expiry, in 1 hour and 37 minutes, this position, that the S&P 500 should be trading above the price level of 2,401. If that's the case, then this contract will settle for 100. If it's trading below that strike price or at that strike price, you can see it's not a larger than equals, it's a larger than. So if it's trading at the strike price or below the strike price, that contract, which I just bought now for 27.50, would be worth exactly 0. This is where the term binary comes from. It's either worth everything, with everything meaning 100, or it's worth nothing, meaning 0. Now, what's my position or what's my risk on that trade? Well, I just placed that order. I paid 27.50 for two times, and this is the maximum I can lose. If this trade doesn't work out, the market will be closing in 1 hour 36 minutes, or will be trading in 1 hour and 36 minutes below 2,401. Then that contract will settle at 0, and everything that I paid for those 2 contracts, 27.50 times 2, would be lost. That's my maximum loss. However, if the market is trading above that strike price, then those contracts will settle for 100. I paid 27.50, so my maximum profit per trade without any fees would be 72.50 per trade. So I'm risking currently around about $50 for a potential to make 150. So my reward to risk ratio on that trade is about 3-to-1, which is very nice. I always prefer my reward to risk ratio to be at least 1-to-1, rather 2-to-1 or 3-to-1. However, if you just try to maximize your reward to risk ratio, that's only one part of the game. The other part is you have to balance the probability that this could be a winning trade in the end. And the market is giving you a help. It's giving you an indication about what the mathematical probabilities from the underlying pricing model would be. And it's quite easy. You just take the mid price between the bid and the offer, And roundabout somewhere in between, this is where the market thinks this is approximately a probability that price can move to the strike price until expiry. So if this contract currently is trading here at 14 to about 20, then mid price of that 14 to 20 would be 6, 3. So we are taking 14 plus 3, around about 17% that this could be a winning trade. And 17% is rather small. The larger your reward to risk ratio on those trades is, usually the smaller your probability will be that this could be a winning trade. However, we are paying attention here to our technical analysis, and we're trying to get an idea about what the market might be doing, and therefore sometimes we can beat those odds. However, keep it in mind, if the market is, usually the market knows what it does, and if it's telling you, I see a 5% probability that this trade might potentially work out for you in the end, usually the market has a reason to give you that figure. And that's part of the challenge and beauty of trading options and binaries and spreads here, is you want to balance the reward to risk ratio with the time left until this option expires, and of course the probability that the trade has a potential to be a winner for you. So keep that in mind. And I want to now also have a look at a potential short trade here, because in the end, I have explained to you why I don't really think that this could be a potentially successful trade here, breakout. I see a lot of weakness in the setup, and for that reason you might tell me, Philip, I would rather consider a short position here. Let's go to a different expiry cycle here. You see this contract here has about 3 hours and 47 minutes left. You have to pick how much time do you want to give that market to move, how much time do you want to give that your position to live. And now let's just have a look here. For example, let's pick that one. I have now picked a strike price of 2,391, and you can see 2,391 is down here. It's quite a bit below. This is why this contract is so deep in the money and costs so much, or offers you so much to sell it right now. That's also two contracts here. And you can see immediately when you want to raise that order, you can see exactly how much is your maximum loss and how much is your maximum potential profit. We're selling 2 contracts here. Our maximum loss would be 27.50. Think about it. We're selling this contract now here for 86.25. And what is the worst thing that could happen to us? Well, in the end of the day, at the end of this contract's life cycle, it is worth 100. We just got 85 bucks for it. I have to settle it for 100, which means I'm losing 50 bucks on that one trade, one contract. 2 times, round about 27.50 in this example. However, if the market starts to crash and tank really hard, and it will be trading below this strike price at that point in time, then I can keep everything that I got for selling those contracts. I can keep everything that I got for selling those contracts, and my maximum profit right now would be 107.50. Again, the market is telling me I have a very small probability from a mathematical point of view that this will work out, but pretty much that's it. So I'm placing that order just to balance things here. And I've already talked again way too much. We are approaching the end. I would really like to show you a very quick picture now of the Russell, and just to highlight that same kind of analysis here. I definitely try to speed it up. Sorry for being over time. Looking at the Russell here, I hope you can see that the Russell really looks weak. Starting with the weekly chart, we see that this market has been going sideways. No real action here, no thrust, no acceleration, and this no acceleration is exactly what we can see here in MACD. Every test of those levels and even slightly higher highs, ever so slightly, definitely with much lower highs here in MACD and in RSI. Weekly chart is a mess. It's a lot of weakness. the daily chart, pretty much the same thing. After we broke out of this level here and pushed higher, no, it wasn't off to the races. It was back again and testing and failing and testing and failing. Next try, coming back, testing and failing and going below. Just guess what might happen when price pushes again higher here to give us a test of this level once more. Personally, I would probably, maybe, be inclined more to think it will be just another failed test. So those might be, and those might be, especially then on lower time frames, be potential entry points for short positions. At least that would be in my playbook, and I will be watching for those on lower time frames. Mr. Soros has been entering long positions in some of the Nadex stocks. I think Twitter and Facebook had been mentioned in the news. And here you can see the Nasdaq much stronger. However, also in the Nasdaq, this one big red candle here on the daily chart, definitely a sign of weakness. Pullback was way deeper than what we have seen here before, and you can see with the size of that candle that the market participants are nervous. It takes, at least that's my perception, it might take only a very minor event to really push everybody over the cliff, and it looks to me like a little bit of musical chairs, and everybody's waiting and is anxious when the music might be stopping. However, Nasdaq definitely the strongest of the bunch, pushing much higher here. And I had also promised you guys a little look here at silver, and the main point I want to make with silver here is silver has been going down what looked to be just a pullback here to test those old levels here, and trying to maybe establish the short position here. Let's make it a little bit larger. Going here to this level, the idea was here that we might get a small bearish candle in the sell zone with fanning moving averages, with a good strong trend, and price might be going lower. However, this pullback is now definitely way too deep. You can see the moving averages here are closing once again, so definitely short time is over now. And you could also argue that this is already a higher low and this is already a higher high, so we might be seeing here a change of trend already. Just reading a question here. Can you explain why you can do a sell and the indicative price be lower than the strike and you're still losing money? Pricing options is a difficult business, and a very crucial part of pricing those options is not only the time to expiry, but also the volatility. And you will notice once you dig deeper into option pricing that the delta of your option will start to move much more quickly, and especially at this quicker move of delta is coming from gamma. And gamma is just speeding up as crazy once time to expiry moves in. It's not just that options are the price of options is not only determined by price of the underlying. That's the easiest one to grasp, but definitely time to expiry plus implied volatility, and those move price. And if those options become dearer and price hasn't really moved, then implied volatility has picked up. Sorry guys if I've confused you now. Options are great. I really love options, but to really get the full picture, you have to dive a little bit deeper there. So my idea, my suggestion would be here, try to read up about delta, about gamma, and especially how those vary over time when options approach expiry. Malik, I hope this has answered your question there. All right, guys. Yeah, pretty much already 5 minutes over time. Sorry about that. As usual, I hope you have enjoyed today's session. I'm definitely here for you guys if you have questions after the official part. For me, for the official part, that's it for now. I hope you enjoyed today's webinar. You learned something new, you found it useful or at least interesting. Would love to hear your feedback in the survey after this webinar. Sign up for a Nadex account or demo account if you haven't done so. You have seen how easy it is to place those trades and get started in the markets, practice with the demo account, great tool to get used to trading those fascinating new products like binaries and spreads. Just reading those questions. Okay, let's finish the official part and then answering those questions. So officially, it's been a pleasure. Thank you very much for attending and the great participation. And now to all of you, have a great day. Happy trading. Thanks again. Catch you next time. Take care and bye-bye.